Good afternoon. Let's talk business now. We are doing it live, doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro. And just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air on 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Stocks kicking off the new week on a mixed note. Investors continuing to take in that, extremely volatile week we had last week. Today we see the Dow starting the week down 140 points. The S&P 500 was up a small fraction of about a quarter of a point, and the NASDAQ did end up higher today, up 35 points. This is all after a wild, volatile week in the financial markets last week, where we saw pretty wide swings almost every single day last week. When it was all over, though, little net change, mercifully, last week. U.S. government debt, meanwhile, did rally further today as tensions in the Middle East still in focus, with Israel's military on high alert, as well as the U.S. military on high alert for the possibility of military action by Iran and its proxies, including Hezbollah. We see the yield in the 10-year note now at 3.91%. Geopolitics threatening to deal more volatility this week, with a lot of uncertainty on the table. Specifically, an expected attack by Iran against Israel could send stocks reeling once again. Already we've seen the price of oil edge higher recently, and right now oil is moving higher to just below $80 a barrel today. The Israeli military working in close coordination with the Pentagon to prepare for a series of scenarios in which either Iran or one of its proxies, namely Hezbollah, could launch an attack or series of attacks on Israel. We're, of course, monitoring the latest bulletins from the Middle East. I'll discuss geopolitics, the Middle East, China, Russia, Ukraine, and the whole works later this hour with Gordon Chang, China expert. Financial market participants facing a big week, potentially market-moving catalysts. We're watching what's happening with inflation once again this week. Wednesday, we'll be getting the Consumer Price Index for the month of July, and on Thursday, big earnings report from retail giant Walmart will be released. We see Walmart shares today moving higher, up 75 cents at 68 and change. Shares of JetBlue today plunging 21%, and that's the lowest now we've seen in 7 months, putting JetBlue on track to set a new record for a one-day sell-off today. The JetBlue shares moving lower at the close. We'll take a closer look at that later this hour. Coming up later this hour, also talk taxes with Grover Norquist, president of Americans for Tax Reform, as the presidential sweepstakes heat up. Taxes very much in focus. And joining us live now is Ken Winans, money manager, CEO, chief investment officer of Winans Investments, capital management and research, Forbes magazine contributor, market historian, author of Investment Atlas 1 and 2, soon to be 3, and co-host of Winning with Winans, heard Monday evenings here at 6 p.m. on 790 KBC. Ken Winans, thank you very much for coming to the line here this afternoon.
I went through last week, the ebbs, the flows, and everything else. But I think at the end of the day, there were several very pronounced trends that I witnessed starting out very early this morning. The first one was in the financial sector, a well-known company called B. Riley & Associates. Suddenly, stock fell 50%, dividends are cut to nothing. This is a company that's been around for a while and had a pretty respectful reputation, so you have some accounting issues. Then, as you pointed out, the geopolitical issues going on, you saw oil take off. But the other news that I kept seeing over and over was about debt. And I know tonight we're going to talk about debt on the Winning with Winans show, but there was reports coming out of San Francisco that the hotels up there have not fully recovered from what happened during the pandemic. Lots of bad debt there. There was another report out that a lot of the schools, public and private schools, are having a terrible time finding ability to refinance their debts. So there's just a lot of crosswinds right now as we go through what's going to be the remainder of this year. I'm of the opinion there's going to be a leadership shift in the stock market, which we'll talk about in a bit.
Absolutely. We're on the air live with Ken Winans. JetBlue having its worst day on record. Looks like S&P and Moody's downgrading JetBlue amid a $3 billion debt raise. The stock moved sharply lower. This is at a time where we were told of course, travel pretty much at or near record highs. The airlines and other travel companies should be doing it great at this point. What's going on here, Ken?
Well, it's interesting that with the airlines, a lot of it comes back to how they've handled their fuel costs. And I bet if we were to dig deeper into it, we'd find that JetBlue probably didn't hedge their fuel costs properly. There might have been some other issues. I mean, I agree with you. All I hear about is that the airlines are packed, the airports are packed, and JetBlue's an established carrier, especially cross country. So I think you have to dig into the cost side of what's happening with these businesses. And I brought up a couple of times on the show that you have to really look if companies are falling, if they're having bad earnings. I guarantee it's cost. It's not necessarily revenue production. It's cost. And we have to remember a phrase that we haven't used in a long time. It's still alive and well. It is stagflation, meaning that we might have some economic growth, but by the time you factor in the inflation, there really is no real growth.
JetBlue stock, by the way, did end lower by $1.25 to $4.80 a share. Of course, we had that wild ride last week, Ken Winans. It was quite a ride with those wide moves. And in fact, a week ago today, we were talking about a more than 1,000-point drop in the Dow Jones Industrial Average. And as things wrapped up last week, we saw a little net change, but certainly it was a stomach-churning week last week. Are we in for more volatility, you think, this week?
It's interesting we're talking about it because I did put out a Forbes article actually on Friday. I don't know how. I cranked out that article real fast. I thought it was timely. It was about the market volatility, and it's specifically about an indicator that most of us that are professional money managers use called the VIX. It is the volatility index of the Chicago Board of Options Exchange, long-time indicator. Money managers use it. Day traders use it. Everybody watches it very closely. And it was interesting that Barron's Financial Weekly actually posted on the front page of their article over the weekend. But the reason I bring it up now is that it's very typical that it very rarely does that indicator have these unusually high swings in volatility, come back down, and never hit it again. They usually happen in pairs. I don't think we're out of the woods on volatility for a couple of reasons. Number one, it is seasonality. August and September have historically been not great months for any of the major indices, whether you're talking about the Dow, the S&P 500, the NASDAQ composite. It's just not. August, I know we often hear about these summertime rallies. I think we had our summertime rally, and now we're just kind of reconsolidating and churning around in a lot of volatility as we go into the fall. So there's that. Number two, and you brought it up, Frank, it's what's going on with commodities such as gold and certainly with oil. It is geopolitical, but I'd also say, too, I think we're also just the simple fact that you're finding that we're having to replenish our stockpiles of crude again. And I'm looking at several stocks that I'll talk about in a moment that have clearly shown that, as much as we might want to talk about getting away from fossil fuels, these energy companies are alive and well and production is high.
Congratulations on scooping Barron's, by the way, on that volatility article. That is something to be proud of, certainly. And what about, well, of course, we're watching what's happening in the Middle East, and we've been told an attack could come at any moment from Iran against Israel. And if that happens, of course, all bets are off on a lot of things. But what about oil here, Ken, which is hovering just below $80 a barrel in New York, for example? Oil moving up, gold also above 2,500 here. What do you see ahead on that front?
It's interesting. What you saw today in when I'm talking about the oil, or let's call them the energy stocks, many of the mid-sized companies had a really big day. One of them was Imperial Oil, which is going to be one of the stocks I'm going to recommend people take a good look at. This is a stock that is, as I'm looking at my screen, it is blue, blue, blue right across the board. It's up on the year. It's up on the quarter. It's up on the month. It's doing very well. Another one is Marathon Petroleum. Now, these are not the Exxon and Chevron names that a lot of people associate with the energy. These are more mid-sized specialty companies. They're benefiting a lot what's going on geopolitically, but also domestically, they are in the right place at the right time to produce the energy sources that we need in this country. So I think it's time to take a good look at, not so much look at the tech stocks that were beaten up last week and trying to catch one of them as the old adage, don't try to catch a falling knife. I would look at the companies that basically didn't skip a beat last week and kept moving higher. And we'll talk about more in a moment, but that includes financials, especially insurance companies. And I have to say it also includes things like the oil companies.
On there live with money manager Ken Winans. And what about the Magnificent Seven here, Ken, led by NVIDIA, which rebounded today more than $4 back to 109 and change. Apple, of course, among the Mag 7 or the Fab 4, however you want to call it, up more than $1.50 today to 217 and change. What are your thoughts about these big tech names here?
There was definitely a relief rally today. You saw it. Not in all tech stocks. I mean, here's a good example. Google was down today. A lot of the other, like Meta was down, Netflix was down, Amazon was down. So it was not across the board. But clearly, names in what let's call them the AI space names and the chip producing type names, they did have a relief rally. I've been asked by a lot of people, would I buy NVIDIA now? I would say, and I'm going back to my trading as a commodity guy. If you want to step into a highly volatile stock like NVIDIA, fine, but I wouldn't do it without stop orders, meaning that pick a point where your loss would be minimized if you are wrong. Because again, I think that there's just so much volatility within these high-flying stocks, and I am just of the opinion that I don't think tech is going to necessarily power the market to the next level. I'm of the opinion that this rally is the bull market, as we would call it, is still intact. But when you have a long-running bull market, it does change leadership time to time. And I think some of these stocks that ran so far so fast, I just don't think they're going to continue at that pace. I mean, even right now, NVIDIA is up 120% on the year. It's priced for perfection. Unless some more good news comes out, I'm not all that sure that it's going to necessarily continue on that same trajectory.
On the earnings front, were we getting the earnings from the big dog in the retail world, the number one retailer in the world? Walmart will be out with its earnings report on Thursday, and we see Walmart hovering just below $70 a share now. What are you expecting from Walmart, and what are your thoughts about the retailers at this point?
If the retail, there's several retailers that I particularly own and I'm very happy with. One of them being Costco, another one being TJX. I mean, some of these companies have figured out what they have to do to keep their cost in line. They figured out what they have to keep their labor cost in line, and they're actually doing very well. I think Walmart will be in that same camp because it has stores in all 50 states. They're able to basically, by economies of scale, be able to get their goods cheap and effectively. And they were one of the few companies that just never really had the logistical problems during COVID. They have a marvelous company, what can be said. But what I would say is this: it's going to be interesting to watch Walmart's numbers on, are the shoppers still coming in? Because what we saw last week and the week before, when we're talking about the weakening of the economy, it's that consumer. And right now, as we all know, credit card rates are very, very high. Everybody's borrowing costs have gone up. Everybody's hoping the Fed will give relief. But it's going to be interesting to see if their traffic in their stores is still maintaining a good pulse as they've gone through the summer months.
We're on the air live with money manager Ken Winans. And Ken, what about inflation? We'll be getting another update this week on inflation. Of course, the markets will be glued to that. So the Fed will be glued to that as well, since they're focused on inflation as well as the job numbers, which came in weaker than expected recently. And that was one of the reasons we're told we saw that big sell-off along with that Japanese meltdown a week ago. What are your thoughts on where inflation goes from here?
Well, Frank, it's interesting because, when you talk about inflation, there's actually two parts to it. There's the demand pull inflation, which really kicked this whole thing off during COVID. Now we're dealing with wage push inflation, which means companies are having to pay people more money in order to keep up with the cost of living. It's almost like it's a ping pong effect. The two feed off of each other. The consumer price numbers, and I take exception to when people say, well, we need to exclude energy and food costs. Well, I don't agree with that. I think you need to include those because most of us have to eat and have to get gas. So I think you have to look at the whole number. But between what we call the consumer price index and CPI, or better known as CPI, I'm going to watch that very closely. Estimates are it's going to come in at about 2.9. That's still running hot for what the Fed wants to see, but it is lower than where we started the year. That might cause the market to give it a little bit more of a push up because everybody's hoping the Fed's going to start dropping rates. But the gauge that I would watch very, very closely is the producer price index that comes out later this week. That's the big one. That's telling you what the producers are dealing with. And that's the one that usually, especially manufacturing companies, we cue in on that. But I think you're going to find that inflation, although coming down, is still running relatively high. The Fed has got itself in a box right now. If the economy's slowing down, I mentioned earlier we have the stagflation problem. They're back into what the Fed had to deal with in the late 1970s. It's just a messy, messy world for policymakers to try to live with. And then you brought up, and you're going to talk later in the show about the tax picture. I think the taxes, and both presidential candidates have their ideas on taxes. Again, I think that's going to play a prominent role in what happens to the stock market throughout the remainder of this year as well as we get closer to the election.
Certainly interesting to note. Of course, President Trump had advanced the idea of no taxes on tips, and then all of a sudden the other side now talking about that same idea. It looks like there are still some pretty wide contrasts, and we'll be talking more about this with the tax expert coming up here later. Certainly big differences between the two candidates on tax policy, which I know you're following very closely.
Well, absolutely, especially when it comes to investment taxes. I mean, Kamala Harris, and certainly when President Biden was running for re-election, they made it very, very clear that they want the 2016 tax package to expire early next year. I'm of the opinion if you raise taxes while you're still in the throes of an inflationary type of environment and relatively high interest rates, that history does not support that to be a good economic policy, and that typically markets get very, very difficult to deal with next year. If that in fact happens next year, I don't think it will be a great year for the stock market. But we're still in this year, and there's just going to be a lot of ping-ponging back and forth with things such as the election, the geopolitical issues. Yeah, there is some positives out there, Frank, and I think, let's always try to go back to that. When the world is in chaos, money typically flows back into the United States. And I think what's interesting with what happened with Japan, and it's very complicated, the yen carry trades. I know people have been hearing a lot about it. It was a long running way to borrow money in Japan and buy U.S. assets. Well, that has all basically covered itself up now. But the point being that money that used to flow into Asia, especially with Japan being the third largest economy in the world, that money's now coming back to the United States. People are coming here for cover. And I think that might be the one saving grace that keeps our bull market running longer, is that you have more foreign flows of money buying U.S. assets, and I think especially U.S. bonds. So there can be some good news for U.S. investors, even though, we certainly don't like a chaotic world, but that can be very good for us here.
All right, let me ask you a surprise question here now. Ken Winans, where are you putting money now and/or taking it off the table?
Well, as I mentioned a moment ago, I'm looking for what has been just basically hasn't skipped a beat and is still moving very strong. I know that a lot of people found themselves overly concentrated in tech. I still encourage them. I think it's time to redeploy your money, rebalance your portfolios. So two names right off the bat on the financial side that I would take a good hard look at, JP Morgan and Goldman Sachs. They both have really strong price trends. There's more buyers than sellers in those stocks. And remember that if the Fed does drop rates, that's a net positive for banks, and they could have a very, very strong fall. I've been a long-standing suggester that you need to, if you don't have insurance stocks in your portfolio while you're in an inflation cycle, you need to take a good hard look here. These are, they have long-standing been inflation-resistant stocks. One that I particularly like is Aflac, symbol AFL. And then last but not least, I know people, they get nervous about oil stocks. Well, I would take a good look at some of the names I mentioned earlier: Imperial Oil, Marathon Petroleum, IMO, and MPC. And I'm still a big believer that gold should be part of people's portfolio. It's had a strong year. Whenever there's a pullback, people are buying it. But again, the spirit of what I'm bringing up here, it's time to rebalance your portfolio.
All right, and last but not least, a little bit of excitement here. Certainly, crypto saw a wild ride this past week. You also have the laser eyes on these days, right? What about Bitcoin and the other cryptos here at this point?
I think you want to bet on crypto, not try to pick up a particular coin. And so my bet in that world for any stock investor would be Coinbase. That is the exchange. It's like saying you're going to buy the NASDAQ or the Chicago Mercantile Exchange or the New York Stock Exchange. They don't pick a stock, they're the exchange. I feel that way about Coinbase. Another thing that's really great about Coinbase, they're one of the few exchanges out there that actually do provide insurance against crypto disappearing out of wallets in their, basically their clients. I like it for that reason. So take a good look at COIN, but Frank, it's also extremely volatile. It's a bit like NVIDIA. If you buy it, you got to hang on. It can really give you a bucking ride.
Ken, thank you very much for joining us live here this afternoon. That is Ken Winans, Money Manager, CEO, Chief Investment Officer, Winans Investments, Forbes Magazine contributor, market historian, author of Investment Atlas 1 and 2, and congratulations, soon to be Investment Atlas 3, co-host of Winning with Winans, heard Monday evenings right here at 6 p.m. on 790 KBC. Ken, thank you very much for joining us, and look forward to talking to you again very soon.
Sounds good, Frank. Take care.
Thank you very much. And out to the freeways now, 790 KBC. 790 KBC welcomes David Gilmour coming to the Intuit Dome October 25th. Tickets are on sale now at Ticketmaster.com. Right now, caller 9 wins at 1-888-795-2222. Get a pair of tickets to the show. If you're caller 9, call now. Tickets furnished by Live Nation. David Gilmour, guitars for Pink Floyd, as you probably know. Call now, caller 9 wins, 1-888-790-5222. Mottek On Money continues here in 790 KBC. Mixed start to the new week on Wall Street, with the Dow coming in for a closing loss of 140 points at 39,357. The S&P 500 up a fraction at 5,344. And the NASDAQ gained 35 at 16,781. The yield in the 10-year note at 3.91%. Bitcoin up about $50 now at 59,089. Ethereum up 15 at 2,697. Doge at 11 cents. Gold moving above $2,500 an ounce, up $10 at 2,514. Oil after hours down 40 cents at 79.66 a barrel. Now the latest news here in 790 KBC. Mottek On Money continues here in 790 KBC. We're watching the latest headlines from the Middle East. As you heard on the latest news, we're watching for a possible attack by Iran on Israel. Geopolitics, of course, threatening to deal a new blow to investor confidence this week, with a mixed start to the markets after a volatile week last week. We're also watching what's happening with China and Taiwan. Let's bring in and discuss the geopolitics and politics now. The Middle East, China, Russia, Ukraine, Iran, Israel, and so forth. Joining us live now, Gordon Chang, author of The Coming Collapse of China, and on X, formerly known as Twitter, at Gordon G. Chang. Gordon, thank you very much for coming to the line this afternoon. It's been a while since we've chatted behind live microphones. So first, let me ask you, I see Democratic Vice Presidential nominee Tim Walz has turned into an overnight media sensation in China. Tell us more about that.
Well, certainly Walz has a long history with China. He's been there 30 times, and so people like that. Also, you have some Chinese academics thinking that he would be much better for relations with the United States, that he would try to have a cooperative in policies. So China right now is very happy about Tim Walz being on the ticket.
Very interesting. And according to the reports we've seen, the Minnesota governor's experience teaching English in China in 1989 during the time of the Tiananmen Square days, the massacre there. What do we need to know about his time there?
Well, he arranged high school students to go to China for instruction. And this would have required the approval of the Communist Party United Front Work Department, which is the part of the party that deals with foreigners and also deals with non-communist organizations inside China. And that is disturbing, largely because the United Front Work Department is up to no good. But the thing that has gotten people's attention about Tiananmen Square and his relationship with China is that he purposely picked the 5th anniversary of the slaughter for his wedding. And he didn't do it just a day out of the year. He did it because he wanted a date to remember, as his wife Gwen said. So there is concerns about that.
What are we to make of that, spending his honeymoon on the 5th anniversary of Tiananmen Square in China?
Well, he can explain away one or two of these events, but there's a pattern, and I think he needs to address the pattern itself. You know, he has said some very good things about human rights in China. He's had his picture taken with His Holiness, the Dalai Lama, but he doesn't seem to have affected his voting records or policies as a representative in Congress, because really what we would like to see is for him to advocate policies that would have imposed costs on China for the human rights violations that he so passionately talked about. So this is going to become something that I think people will examine during the campaign.
You were on the air. I was on the air back in 1989, but many of our listeners may not even remember what happened at Tiananmen Square when Democratic protesters were, pro-democracy protesters, I should say, were crushed by the Chinese military. What are your thoughts about what happened that day and how somebody could commemorate it with their wedding?
Yeah, the Chinese people, and it's not just pro-democracy protesters, but workers and ordinary citizens in Beijing expressed their frustration with the party during that spring. And so it was a mass movement, and not just in the Chinese capital, but in about 370 other cities. Deng Xiaoping, the leader at the time, decided that he had to show the people that the Communist Party was willing to kill to stay in power. And the people who took the brunt of it were ordinary citizens in the western part of Beijing who opposed the advance of the People's Liberation Army towards the center, Tiananmen Square. This changed the relationship between the party and the people irrevocably in China, and it's a wound that has yet to be healed.
On the air live with China expert Gordon Chang. Fast forward to the present, I see a latest report saying China's government is calling for people to denounce what they call diehard secessionists and give information about their criminal activities, in quotes, as it intensifies its legal and rhetorical intimidation of Taiwan. What are we to make of these latest reports?
Well, this is in connection with China threatening to impose the death penalty on Taiwan separatists, as they call them. People in Taiwan want good relations with Beijing, but they don't think they're Chinese, and they've got a lot of history to support them. Whereas Beijing insists that they be annexed as China's 34th province. There's a lot of psychological pressure on people in Taiwan, and it does not seem to have had the effect that Beijing has wanted. We've seen a lot of military pressure against the island, and again, that has somewhat been counterproductive. So I think Beijing is at a loss what to do because it is seeing Taiwan society diverge. People saying we're Taiwanese, we're not Chinese. And that is clear in self-identification surveys, which show more and more people believing they are not Chinese.
Zooming out to the big picture, you follow military moves around the world. We see a U.S. Military presence in the Middle East increasing, with Israel anticipating an attack by Iran possibly any minute now. Give us your view of what's happening around the world here.
That could be the event that breaks stability around the world. We have wars going on in Ukraine, in the Middle East. We have insurgencies in North Africa that look like wars. The international system is very fragile. And if there were to be an all-out attack by Iran on Israel, and that's not clear that they'll do that, but if there were, that could be the one event that triggers conflicts elsewhere. So we've got to be extremely concerned, and that's why the U.S. is rushing military assets into the region in the hope that Iran will not retaliate. But we will see, most people are expecting some sort of military action by Iran this week.
Any other military moves detected by China or Russia at this point?
Well, the one thing that is disturbing is China's military activities in the South China Sea, which, people always talk about Taiwan, but China's most belligerent tactics are in the South China Sea against the Philippines. They're continuing to do that. These are the types of acts that could actually lead to a war, especially because the United States has an obligation to defend the Philippines pursuant to our 1951 Mutual Defense Treaty. So I think that is the most dangerous flashpoint in the world where there is not actually yet a war. There could very well be one there, though, at any moment.
On the Air Live with Gordon Chang. Anything else important, Gordon Chang, that you'd like to mention? Of course, we follow your your X tweets, I guess we call them, right, nowadays. And anything else on your radar screen that you'd like to mention at this point?
I think the most important thing is the Chinese economy. Xi Jinping doesn't have a solution for it. He believes that he can export his way out of crisis, which is increasingly unlikely as countries start to restrict their markets to Chinese goods. If Xi Jinping can't come up with a solution, and I don't think he can at this point, then he is facing severe crises at home, and his only way out would be to start a war. I don't think he'll do that, but nonetheless, that's a real possibility, and it's a possibility that I think the administration in Washington is not fully prepared to deal with. So we're at one of those vulnerable points.
We'll keep a line open to you and follow all of these developments very closely. Gordon G. Chang, thank you very much for joining us live here this afternoon.
Thank you so much, Frank.
China expert Gordon Chang, author of The Coming Collapse of China, and an ex formerly known as Twitter at Gordon G. Chang, live with us here on Mottek On Money on 790 KBC. Mottek On Money continues here on 790 KBC. Good afternoon. Turning to taxes now. Been hearing a lot from Vice President Harris about taxes lately. Looks like she has repeatedly vowed to repeal the Tax Cuts and Jobs Act one on day one. This is the one that President Trump put into place. Such a repeal of the Trump tax cuts would result in an across-the-board income tax increase, a death tax hike, a small business tax hike, take away the double child tax credit and the expanded standard deduction, and impose a 35% federal corporate income tax rate, a rate even higher than Communist China and Maduro's Venezuela. So says the group Americans for Tax Reform. This at a time when Vice President Harris is getting attention for basically taking a page from President Trump's playbook, and that is calling for no taxes on tips. What's going on? Let's bring in America's leading taxpayer advocate, Grover Norquist, president of Americans for Tax Reform. Grover, thank you very much for taking the call this afternoon.
Oh, delighted to be with you.
Give us your impressions here. Yes, sir. Go ahead.
Yeah. Biden got the economy in a very bad spot with the tax increases that he pushed through. And he's threatened to do more if he got reelected. Then, of course, he stepped down because he was going to lose, or got pushed out, I guess, didn't really step down. And now Harris is in, and Harris's positions are more radical, higher taxes, more taxes. She wants to have a tax on transactions at a bank, so which would tax, every time you write a check or whatever, money that goes through a bank. That would raise quite a bit of money, and only very left-wing Democrats have ever endorsed it. It isn't it's way out there. And as you went through, she wants another death tax. She wants higher personal income taxes. She wants to take away your per-child tax credit. That's what it means to get rid of the entire Trump tax cut. He doubled the per-child tax credit, the standard exemption. And she also says she wants to ban fracking, which I guess is 100% tax on some energy, and wants to tax carbon, which means gasoline, home heating oil, electricity. Again, raising the cost of everything, giving us higher cost of living. And she thinks, but she's been getting attention because she took an idea that Trump had put forward, which is not taxing tips for people who work at
restaurants,
and restaurants and so on, and Uber, Lyft, those sorts of project lines. Very good idea. It reduces the cost to make a living for people in that zone, and I mean it's a real opportunity to make a step forward on that. We have a real problem. Go to any restaurant in the country, and you'll see people are looking for work. We're having trouble getting people to come out of staying home. They'd rather have welfare or not work, or they got used to not being there for COVID. These are jobs in person, and we need more of those people out working. Not taxing tips would make that easier, more profitable for people to do that. It'd be very helpful to small businesses, restaurants, hospitality industry. And it was a great idea that Trump suggested it. Interestingly, the unions fought it. The unions said, no, we don't like it, because it's hard to unionize a company or an industry or a restaurant if people are paid based on how hard they're working. Okay? Unions work when they say everybody gets paid the same because you're all the same. You're all just sort of identical folks, and it doesn't really matter who's there and who shows up. You're all going to do exactly the same work in an hour. We all know that doesn't make any sense, but that's the way unions are structured, and they can only operate if everybody gets paid the same, because everybody's presumed to have exactly the same skill, work just as fast and just as competently. And that's not true at a barbershop or at the hair shop, or at a restaurant when you're served there, or at a bar. I think it's a great idea that Trump put forward. I think it's very interesting that the only idea that she's put forward that's had any positive impact has been this, and the press treats it as if she thought of it.
Yeah,
or some,
it was her idea.
The press does.
Also, should note this, President Biden says that he would sign a bill that would eliminate taxes on tipped wages, according to the White House spokesman today, seeming to agree with the policy first floated by former President Trump and picked up by Vice President Harris. Now, the White House press secretary stating that the Biden administration's position during a news briefing today that Biden now supports eliminating taxes on tips for service and hospitality workers. Might this go through before the election?
This is possible. The left has been saying, "Oh, we're doing very well in politically and in how people are looking at polls." They must be scared. The Democrats have never taken Republican tax cuts and said, "Oh, that's our idea now too." They must be looking at different polls than they're talking about. They're looking and deciding they'd better get with a program of lower taxes, or at least have some lower taxes out front, because all their other ideas, every idea that Harris has ever put forward, has been a tax increase. All her life, she's been advocating higher taxes, and as a vice president, and as a candidate for the presidency when she lost in 2020, she was out there with much more radical tax increases, even than Biden, worse than Biden.
Interesting. Well, of course, we all remember, most of us listening remember what happened in '84 when former Vice President Mondale from Minnesota, by the way, promised higher taxes against then President Reagan. And, of course, President Reagan won in a landslide, and the only state that Mondale won was Minnesota, where Waltz is from, right?
Yes, and Waltz is a big tax and spender. He did a tremendous increase in spending, just up there like Biden did. If you want to see tax and spend, Waltz is that person. He passed significant tax increases, significant, massive new spending. They could have paid down some of their debt. They could have made their pensions whole. Instead, they turned around and just spent money that they didn't have. They took money that was one-time money from the federal government and treated it as if it was going to be there every year. They're going to crash. If he doesn't get out of there to do something else like be vice president, he's going to be in trouble as governor, because he's bankrupting that state, very left-wing, and he's the guy who refused to do anything when the Black Lives Matter riots were going, and they burned. Remember that the mostly peaceful effort that burned down an entire police station, and he did nothing to stop it, and objected to the idea of having the National Guard come and protect the police and the police station. And so things were burned down because he said he'd rather see them burned down. These are the same riots that Kamala Harris was writing checks to and urging other people to write checks to get the perpetrators out of jail immediately.
Grover, thank you very much for joining us live this afternoon. Grover Norquist, president of Americans for Tax Reform. Appreciate you standing up for all taxpayers here in Southern California. Stay tuned now for the 790 KBC News Blitz with Randy Wang. I'll be back tomorrow at 4. More at 4. Mottek On Money, 790 KBC.
When you have sports mixed with your pop culture, along with humor and celebrity interviews, your earbuds are enjoying The Rich Eisen Show.
Good to see you, Bruce Feldman, the Big 12 landscape. I just know how Dion is, where he's coming from. His wins are measured differently. The question is, as you said, it's got to go from 4 to 8.
I think they can do that. It would be hard not to get better considering how bad they were on the offensive line last year. Now, their schedule actually feels harder this year than it was last year.
Search for The Rich Eisen Show on YouTube or wherever you listen.